Hello, it's me. Forgive the casual attire, it's my day off today, but I wanted to do a little video on rates because at the moment we're going through a really turbulent time still, it feels, in the UK with interest rates, and that's having quite a big impact on people's monthly payments and what their mortgage payments may be or will be after their current deal ends or when they purchase a new property. Now, this has prompted a lot of the same kind of question being raised multiple times by many clients, and I thought maybe if I do this little video, it'll help put some people's mind at ease and hopefully give you a bit of reassurance on what we're doing and what other mortgage advisors are doing to make sure that you get the best deal for you. Now, the first thing which I should mention is that when we give advice, or when anybody gives you advice, all we can do is base that advice on the information that we've got to hand on that day. We've all got opinions on what the rates might do in the future, but none of us, as far as I'm aware, none of us know for sure what's going to happen in the future. So all we can do really is base our opinion on what's happening that day, or base our advice, on what's happening that particular day. We take into account your opinion on what may or may not happen. For example, if you're absolutely convinced that rates are going to drop and you're happy to take the risk that if you're wrong, this might cost you some money. So if we put you on a tracker because you think rates are going to come down, so you'll benefit from that, but rates end up going up, that's a risk you've got to take in order to get that reward of the rates dropping if you are correct. What we tend to find is that people normally, whilst they would like rates to be lower, don't want to accept the risk of them going up, so they'll opt for a fixed rate. Now, more recently, over the last year or two now, 5-year fixed rates and the longer term fixed rates have been lower than 2-year fixed rates, which in recent years is quite an anomaly because typically 2-year rates are lower as there's less risk for the bank. At the moment, because banks seem to be of the opinion that rates are going to peak and then start tapering off again, they're willing to give you a lower fixed rate over a longer period of time. Now, lower fixed rate might make it sound like it's a really good deal. It isn't necessarily, because at the moment people are coming to the end of fixed rates which might be 1.5%, 2%, 2.5%, and the best 5-year fixed rates are still only around the 4% mark, and that's if you've got quite a low loan to value. 2-year fixed rates are still higher. They're normally about between 0.5% and 1% higher than the 5-year fixed rates at the moment. Anyway, the reason I'm doing this is to what happens and what are we doing to protect you. Now, as I mentioned, we can only give you advice the day we give you the advice on what's the best at that moment in time. So if we're doing a remortgage application or a product transfer, so that's you already own your property and we're looking at what's the best deal for you. Is it the best thing to stay with your current lender or is it the best thing to move you to a new lender? When we put that application in, we secure the rate for you. The rate that we've advised you on that day, we'll put the application in with your authority, of course, and we'll secure that rate. So that means that you're going to get the rate of 5%, for argument's sake, from, let's say, Halifax. If you're already with Halifax and we do a product transfer with them, 5% that day, that's what we'll secure. If rates go up, you're fine. Even if it doesn't kick in for 6 months and rates double or triple, that's okay, you've got that 5%. Same thing with a remortgage. If you were with Nationwide and you're moving to Halifax and we put an application at 5% and that's accepted and you get your offer letter, even if it takes 5 or 6 months for that remortgage to complete, for that new rate to kick in, you've still got that 5% no matter what happens in the future. So it removes that interest rate risk from you. The risk that you then take on is what happens if things get better. What happens if we meet today for a mortgage that's due to a deal that's due to end at the end of May, and then in February or March or April or even perhaps early May, the rates that are available are lower because they're fluctuating up and down so much. Now, what we do is keep an eye on what's happening with rates in general, and we will have a review of all of the pre-completion mortgages that we've got under our management at that time to see if there's any significant movements in the rate. Now, that's something which we do. It isn't part of our advice process. It isn't part of the service that you're paying us for. It's just part of what we do because we want you to get the best deal. We want you to be our client long term. And if we come back to you and say, would you believe it, we've managed to knock you an extra 50 quid a month off at some point between us giving you the advice and that completing, you're probably going to be delighted, which means that probably in 2 years or 5 years' time or whenever you next need advice on a mortgage, you're going to come to us, which is great. We love that. So do other advisors. So do other mortgage advisors. Other small firms in particular, they'll like to keep you impressed with them. Now, I know that there's a lot of really good advisors locally, and we've heard stories of other local advisors and other advisors further afield doing exactly the same thing, that they're still keeping an eye on rates after they've happened. Why do we not say this is part of the service? Now, the reason we don't say this is part of the service is that we have a lot of deals which are pre-completion at any one time. If I was to check those every single day, we'd be out of business within a month or two. We just can't check every product, every rate that we've secured for people every single day up until the last date that we possibly can do. So we just say we're going to check those fairly regularly, but we're not committing to doing that. We just do it as a matter of course. It's good business practice for us and it's great news for you. So with that in mind, what we'll tend to do is we'll be in touch with you every couple of months or so saying we've had a check, everything's still the same, or we've had a check, things have improved, this is what we've done instead. Now, if you spot something which is better, so let's say we've secured your rate of 5% now for this mortgage in May, and then in April, your current lender writes to you and says, dear Mr. Client, or dear Mr. Customer in that case, we'd like to offer you a 4% rate. Give us a ring and we can normally secure that for you anyway. So we can cancel off whatever we've done, even if it's with another lender, we can cancel that and we can switch that onto this new rate for you. So why do we ask you to do this if you're using a mortgage advisor? The reason is that we've got all these mortgages, and it might be that that one day when they write to you is the day before we check, or it might be a week before we check. If the cut-off date for your rate falls just after that, if you let us know, we can get it done. So do keep half an eye. The chance of us missing things is quite small, and the chance of any advisor missing things is quite small, but there is always a chance. The advice you're getting from us or any other advisor, that's based on the day we gave you the advice. It doesn't cover every single day thereafter. Now, same goes really for purchases. If you're buying a property and we give you advice in January and you're not going to get the keys until May, again to use this same time frame, we'll give you the advice on the best deal for you in January. If in March rates have plummeted down, we will pick up on that very probably, and we will also very probably get in touch with you and say, hello, did you know we can now get you a better deal? Normally with a purchase, some lenders don't do this, but normally with a purchase, when we go back to the lender and say, any chance we can have that new rate of 4% please for our client because they applied when it's 5%, things have come down significantly, that would be the best thing for the customer. Most banks will say, yeah, you can have that, but before we apply that, we're just going to pop it back to the underwriter so they can have a look to make sure they're still happy to lend that person money. Now, if nothing's changed, if you're on the same income, you've got the same outgoing, so you've taken no new loans out, you've not changed employer, you haven't missed a payment on your credit card or something daft like that, parking fine you haven't paid, if nothing has changed, the chance of anything going wrong, of the underwriter looking at the case again and thinking, hang on a minute, we're not happy to lend to these people now, is really small. But it is there. It's a tiny chance, but it's a chance. This is why we don't do that automatically. We don't just go back to the lender and say, oh, 4%, great, we'll have that, that's better than 5%, let's just get that done. Not where there's a chance it might mean that your offer letter's withdrawn. With that, we'll always come to you and ask. So, sorry, this video's going on a little bit, but there's quite a lot of information. Hopefully you're finding this interesting, or useful at least, if not interesting. Then, so again, we don't promise that we're going to check that every day because we simply can't. The logistics of it all, we give personal advice, we give one-on-one advice to each individual person. Now, it might be that you see a rate advertised on TV. There's been a huge amount of this recently in the press with people saying, oh, there's a rate of 3.5%. There might be, and you might have a rate of 4.5% secured, but to get that rate, you maybe got a different loan to value, maybe there's different lending criteria, it could be self-employed people aren't accepted as easily, it might be that loan to value is where you've got a more equity or bigger deposit. There's lots of different things we take into account, so it might be that if you see a rate online which is lower, it's not the right one for you. Now, when we're giving the advice in the first place, right now today if we were giving you advice, if there's a lower rate, I'll point that out for you. I'll say, look, there are lower rates, these, this, and this are available. We're not going for those, we're going to go for this rate because you don't fit the criteria for those. Maybe they won't lend you enough for any number of reasons. So we're going for this product. That's great, we all understand what we're doing and everybody's happy. 2 months later, when you've kind of forgotten what we talked about that day, it might be that you see those same lenders advertising a rate which is cheaper than you've got. And so you say, I want to cancel this and I want to go with one of those lenders instead. We still can't. If your situation is the same, unless they've changed the criteria, we can't necessarily get you the lowest rate that you see advertised on the television. We get you the best rate for you. So hopefully that kind of makes sense. But again, with purchases, we'll check with you before we change the rate. We do keep an eye on it, but if you see something, especially if it's from the same lender, then always let us know and say, look, I'd just like to check, can I have this deal, please? And we'll talk that through with you. Normally, we'll have been in touch with you first, but if we're not in touch with you and you see something advertised by the same lender, let us know. I say we're a human business, we're not a computerized business. So we actually give you personalized advice. And every time we look through and review a rate on your product, your mortgage, we're looking into your file, we're looking into your circumstances. So it's probably about a 15-20 minute job per person, per case. So every time we do that, we obviously can't do 100 cases in a day because there aren't enough time. It's not enough time in the day, but we do it quite regularly for you. Yeah, that's it really. What else have I got to tell you about rates? That's it. The other thing I was going to mention quickly while we're on, a number of people who are out looking for properties. Maybe if you've had a decision in principle from us because you're actively searching for a property and you want to be in a position so you can show estate agents or builders or vendors that you're in a position to proceed and you can get a mortgage. In that time when we get you the decision in principle, we aren't giving you any advice on what the best product is for you at that point. All we're doing is saying, this is probably a lender who we'd consider using. Let's get this agreed in principle so we know, and you know, and the person selling you a house knows that banks are minded to lend you as much money as you'd need to buy that property. That's pretty much it. There's no advice being given at that point on which deal we're going to go for. We'll talk about rates, we'll talk about how the fixed rates work, how tracker rates work, whether a 2-year, 3-year, 5-year, 10-year or even longer offer period might be suitable for you. We haven't picked a rate. So a few times we'll get people coming back to us saying, with a decision in principle, who haven't found a house yet, saying, what will the rate be today? And what will the rate be next week? Or what might the rate be if we go for a 2-year fixed rate now? We're always happy to discuss that with you. We can say, this is roughly where we'll be, but we can't give you exact figures on exactly what it will be each day to day, purely because they're changing so quickly. So we'll just say, look, at the moment, I would say typically for a 2-year fixed rate with a medium-sized deposit, so between sort of 10 and 25%, you're looking around 4.5%-ish. Typically with 5-year fixed rates, you're looking around 4%-ish if you've got a fair amount of equity, but that varies dramatically from lender to lender and from situation to situation. Typically at the moment, anything that's under 5 is a good deal. Anything that's under 4 is a phenomenally good deal and will quite often come with significant fees or restrictions on the loan to value or the amount of people it's available to. But I say, the rates are changing each day. It might be that if I made this video tomorrow, it would be completely different. I've waffled on long enough, that's 12 minutes. Hopefully this has been really helpful for you. And yeah, have a great evening. I'll speak to you soon. Take care. Bye-bye.